is a paid program. The views expressed are not necessarily those of the management or ownership of Score North, KSTP AM 1500.
This is the place to talk about everything related to the home. Buying or selling real estate, financing and improvements that can help increase your home's value. This is Minnesota Home Talk on Score North. Here's your host, Jason Walgrave.
Good morning, folks, and welcome back. This is Minnesota Home Talk, and we're live on 1500 Score North. We are the original real estate show here on AM 1500 radio. We're live every Saturday morning, of course, on demand at minnesotahometalk.com. Be sure to check out our website, minnesotahometalk.com. I'm your host, Jason Walgrave with Walgrave Real Estate Group and the Minnesota Real Estate Team at RE/MAX Advantage Plus. Of course, in studio is Mortgage Michael Overson. Did you see that fade I did with
that was nice.
the mic? Did that work well, Evan?
No,
on air?
That's how the pros do it, Evan. You probably don't even know that.
Yeah, okay.
They don't use fader buttons and stuff like that. They just
Manual.
just
Sure. Totally. 100%.
We also got Evan Little here, the not only the producer, the master producer, doctor producer, but he is also our insurance expert as well with Paragon. Folks, we're going to open up the phone lines right away. We're going to be giving away 2 pair of tickets. T-Wolves they're kicking some butt.
Someone said on the radio the other day that's like, I can't even believe that I'm saying this right now, but the T-Wolves are a force to be reckoned with this year.
They are, I mean, the last 12, 15 games, they are really doing well.
They are mowing people down, like
Towns
winning by
had-
20, 30 points.
Yeah, scoring like 149 points in a game.
Yeah, Towns had 60 against, Dallas, right? I think he had 60 against Dallas.
Yeah, we beat the Lakers the other night.
It's about
Or no,
time
San
that
Antonio.
Towns
It was the
got good.
Spurs. It was the Spurs. He had 60.
That's incredible.
Nice.
So they're exciting to watch. If you'd like to go to a Timberwolves game on us, give us a call this morning with your real estate questions. Anything and everything real estate related. We're giving away 2 pair of tickets. So the 2 best real estate questions are going to win 1 pair of ticket each. 2 big winners this morning. Phone lines are open at 651-647-2910. If you'd like to go to a Timberwolves game on us, give us a call with a real estate question. The studio lines are open at 651-647-2910. Give us a call. You can also text us your real estate questions, anything and everything real estate related. The text line to win Timberwolves tickets, text us your real estate question to 763-443-5664. The text line to win tickets to the T-Wolves. 2 big winners this morning, 1 pair of tickets for each winner. Text us your real estate questions to 763-443-5664. Anything and everything real estate related, home improvement, credit, insurance, new construction, anything to do with your home, anything and everything real estate related, give us a call or send us a text to win Timberwolves tickets. The T-Wolves are looking good.
Yeah, baby.
We got a lot of stuff to talk about this morning, folks. We've got market updates. We'll go over some updated statistics that I pulled from yesterday. We have, of course, our smoking hot listings. Mike and I are going to talk about the cost of waiting. We have seen interest rates rise over the last 60 days. Folks, they're still fantastic rates. Anything below 5% is an outstanding rate on your mortgage. We're going to talk about what it means to wait. The cost of waiting compared to days. 1-647-2910. That is the studio line. Call us here in the studio. Ask us your real estate questions, anything and everything real estate related to win Timberwolves tickets. 2 best questions are going to win. Studio lines are open. 651. Give us a call, folks, at 651-647-2910. That is the studio line. Or you can text in your real estate questions to 763-443-5664. The text line to win T-Wolves tickets is 763-443-5664. Text us your real estate questions. 2 best questions are going to win. All right, smoking out listings.
Let's do them.
I think I put them in order, Evan. For
Okay.
you. All for you, baby.
Okay.
Alphabetical order or
Not alphabetical.
Oh,
It's kind of
numerical.
Not numerical. It's supposed to be newer to older listings, but I don't know. All right, folks, we're going to start in Cottage Grove. All right, it did go in order. Cottage Grove, Minnesota, located at one of the finest streets in the United States. It's located on 7665 Laverne Avenue South. It is a split level, 1976 built with 1,886 square feet. We have 4 bedrooms, 2 bathrooms with a 2-car garage on the market for $339,900. Again, located at 7665 Laverne Avenue South in Cottage Grove. Moving over to St. Paul. This is a really cool condo. Wonderful front elevation. The building, I love the building. Located at 600 Summit Avenue. Number 600-2. This is an 862 square foot condo. 2 bedrooms, 1 bathroom. Has storage, off-street parking. Again, on Summit Avenue, really fantastic property. It's got some exposed brick, open floor plan, on the market for $250,000 in St. Paul. Pebble Creek Custom Homes has a couple lots left in the Twin Ponds development in Savage, Minnesota. This is located at 14649 Sumner Avenue South. It is a 0.64 acre lot on the market for $110,000. Incredible price for a over half-acre lot in Savage. This is the Prior Lake School District. They have one on the corner as well. That one is priced at $145,000. 2 lots left in that development. They have a to-be-built located on Sumner Avenue as well. A 2-story, this one's a Rambler actually, 2,400 square foot foundation. It is a 4-bedroom, 3-bathroom, 3-car garage. Custom finishings throughout. Opportunity to still make changes and customize this incredible floor plan. On the market for $995,000. New listing in Edina. Folks, would you like to live in the Galleria property located at 3209 Galleria? This property has 865 square feet. It is a 1-bedroom, 2-bathroom, incredible views, completely renovated, brand new kitchen, bathroom. This is a one-of-a-kind property with an outstanding location in Edina, on the market for $650,000.
The amenities with this one are sweet.
It is pretty amazing.
Nice pool area. The gym is phenomenal.
And this is in the Weston Edina Gallery residence. So check it out. Great property. Really excited to get this one on the market.
Super nice.
We've got a commercial opportunity in Duluth, Minnesota, 30,000 square feet. This sits, it is a total of 5 units. Great commercial property located at 327 West 1st Street in Duluth, on the market for $1.75 million. Folks, we cover the entire state of Minnesota and western Wisconsin. If you have properties to sell anywhere in those areas, we can help you out, whether it's residential or commercial. Moving down to Dundas, Minnesota, we have a development opportunity, commercial zone, 130 acres, located at 1736 Millersburg Boulevard West in Dundas, Minnesota. A half-mile of interstate frontage, on the market for $5.2 million. Fantastic commercial development opportunity. Moving back up to Prior Lake, Minnesota, we have a development. Pebble Creek Custom Homes is building. There are 9 walkout lots on a nice cul-de-sac surrounded by a 12-acre preserve, so a lot of privacy. All half-acre plus walkout lots. Lots range in price from 135 all the way up to 175. I think there are 3 lots left in that development. Great opportunity to build with Pebble Creek Custom Homes. They have a to-be-built 2-story on the market, 2,941 square feet above ground. This home is priced at $950,000.
We are cruising.
We're moving as quickly as you can click those buttons.
Finger fire over there. Evan's
I play first-person shooters. I can click pretty fast.
You got your gaming mouse over there?
No, unfortunately. No.
We'll bring that in next week.
We'll
burn through it. Down in Red Wing, Minnesota, one of the most spectacular properties we've marketed, located at 27858 Greens Point Road. This is in the Lake Pepin area. 1 acre lot, has 425 feet of sandy beach. Spectacular property. It has a pagoda-style home on it, which is ready for a remodel or a new development of this lot. It's on the market for $2 million. Again, located at 27858 Greens Point Road in Red Wing. In Aiken, Minnesota, Docks Harbor. If you'd like a resort-style lifestyle, resort-style living, here's an opportunity to buy an investment property with 32 RV sites, 26 boat slips. Ability to expand those boat slips. This property sits on 4 acres. It is on the north shores of Mille Lacs in Aiken, Minnesota. 39629 State Highway 18 in Aiken.
Docks Harbor has a lot of docks.
Docks Harbor, and opportunity for a lot more. Folks, for more information about these Smoking Hot listings, go to our website, minnesotahometalk.com. It is, I'll tell you what, it's the best way to connect with Overson, myself, Evan, all of our fantastic radio show partners, including Remax Advantage Plus, Luminate Home Loans, Pebble Creek Custom Homes, Bella Remodeling Roofing, Todd Rooker. By the way, Todd has a phenomenal show, Cover Your Assets, that's on right after ours on AM 1500. We have Last Switch, Ryan Boyd, Nepsis, our good friend Josh Big England.
Mm-hmm.
So you see that, Big?
That's it's on his birth certificate.
Yes. Joshua Big
England. Yep.
With
That's right.
Nepsis, we have Credit Life, of course, Brian, Jared, and the team. Trademark Title, Urban Landworks, Home Inspections with Neil Mullenberg. We have Spare Key, Paragon.
Yeah, we should probably update that.
I hesitated because it still says Simplified Insurance Planners.
That's all right. The link gets you to the right
gets
place.
you to the
My
right place.
simplified
FKA.
email will work for a long time, I'm sure.
Yes.
Paragon Group of Companies, FKA, Simplified Insurance Planners,
DBA.
FKA.
Sync Home Services, your home warranty company, EKJ Appraisals, Trend Home Staging, Sioux Falls Real Estate with Marcus Walgrave. That is Hague Realtors out of Sioux Falls. Chestnut, Cambrone, Jeff O'Brien, our attorney, Detail Home Services, Rock, Pain Free Patriots, Trust Vets, Riverland Bank, Keppers, Plumbing, Home Media Innovations, Rental Management Guys, and Lift Up. Folks, we also have some wonderful tools on our website, Free Property Search. You can set up custom searches. It will notify you within about 15 minutes of a new property hitting the market that fits your criteria. You can click on the property search button to set up that free custom home search. Sell your home in 72 hours. Learn about our 72 Sold program. What's your home worth? We'll do a free market analysis on your home, land, or investment property. We've got information about webinars that we do. Is refinancing right for me? That's a question that Mike Overson gets throughout the year. Ask a question, free home analysis. That's on commercial properties as well. Land. Become a partner. Would you be interested in joining Minnesota Home Talk as a partner? I would love to talk to you. And then, of course, you can get neighborhood market values as well. Check out our website, minnesotahometalk.com, folks. That is minnesotahometalk.com. That is the best way to get a hold of us 24 hours a day, 7 days a week, 365 or 66 days a year.
I suppose, yeah.
Yeah, I see. I slipped that in.
365 and a quarter
All right.
days a year.
Folks, we got the phone lines open. If you'd like to go to a Timberwolves game on us, we're giving away 2 pair of tickets this morning. The T-Wolves are doing pretty awesome. They're a lot of fun to watch. And if you'd like to go to a game, 2 big winners, a pair of tickets each, give us a call. Studio lines are open at 651-647-2910. That is the studio line here at the radio station. It is live. We'll take your questions, anything and everything real estate related. The 2 best questions are going to win Timberwolves tickets on us. Give us a call, 651-647-2910. Again, give us a call at 651-647-2910. The text line, you can also win Timberwolves tickets via text by texting your real estate questions to 763-443-5664.
And we've had some text questions come in, so we're
right.
going to get those rolling one more time. 763-443-5664. So Caleb's question, which is up on the screen now. Are people completely waiving the appraisal? Is that legal with the banks? My realtor said that there's always appraisals. Are appraisers the ones that are curving the market?
Fantastic question.
Those appraisers.
Those appraisers?
So, a great question. I think, are people completely waiving appraisals? Well, they don't really. The only opportunity that a buyer has to waive the appraisal is if they are a cash buyer.
Yep.
And they're choosing not to do an appraisal. Or if there's an appraisal waiver, but that's not the buyer's choice necessarily.
That's not necessarily the buyer's choice.
Yes.
Correct. Yeah.
Talk about the appraisal waiver. What is
So
that?
the appraisal waiver. So every loan in today's world, there's an automated system that you have to run the loan through, right? Yes, there's a human underwriter that will look everything over, but if you got to get the system and what it's different system, right? So conventional loans is one, FHA loans is another, VE loans another one, right? So you got to get an approval through that particular system. And that system will basically do a risk analysis on it, right? It'll say, yeah, we can lend on this particular borrower. Here's what we need for documentation and things like that. Then that system also says, is an appraisal required or not? Sometimes you can get it done where the system says, you know what? We don't need an appraisal on this one.
So does it have more to do with the property or more to do with the borrower?
It'll do both, more with
Okay.
the property.
Okay.
So the system does almost kind of like a Zillow type of deal, right? It goes online, it tries to find information on the property.
Yeah.
It looks at the value that you entered into the system for that particular property. And if it can find enough information online to support that value, then it's going to say, yeah, appraisal waiver. Now, the strength of the borrower also plays into that too.
Sure.
So the stronger the borrower, the less chance there is for default. And then the more open they are to not having an appraisal done because your chance of default are that much less.
So if you've got a borrower that's putting, say, 25% down, they got solid credit, they've got, they're a really, really strong borrower,
Yep.
they have a better chance of getting an appraisal waiver.
Yes.
Okay.
Oh, yeah.
Yep.
Yeah.
And then, of course, the higher that percentage goes, it's going to, if they're putting 50% down, the appraisal is very likely to be waived
Yeah.
at that point.
Now, I haven't gotten an appraisal waiver in a while.
Okay.
And the reason is because the way the system works, again, it's like a Zillow type of deal with people offering over list price, right? So the system would be like, okay, so at list price, so when an agent goes out there and does comparables and stuff, like a home like this just sold for this, a couple months ago, whatever, blah, 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 right? So if you enter in that particular price into the system, you probably got a decent chance, especially if you have 25% down and a good borrower and stuff, to get an appraisal waiver. But if you're going over list price to get it, now the system can't find comps to support that over list price that you just offered. And so now it won't give it to you because it's like, I can't find any comps that's going to support that type of value.
Yeah.
So again, it's not like a human appraiser going out there or a real estate agent going out there and doing like a market analysis or an appraisal on it. It can, systems, automated systems like that can only do so much.
Yep.
Right. So I've seen a lot less just because it seems that you have been offering over list price in order to get homes, and the system just can't find comps to support that price.
Would you say there's more appraisal waivers on single family homes than there are on townhomes?
Yes, I would
Yeah.
probably say that.
Just because there's more variables on single family homes.
Yeah.
So his question is that legal with banks? Appraisal waivers absolutely is legal.
As long as the system says we don't need an appraisal to do this loan, you're good to go. You don't need an appraisal.
Yeah,
Yeah.
it's not a customer decision. It's a banking decision.
because they're getting the loan and everything. Yep. Now, if you're a cash buyer, then you certainly can do an appraisal. One of the benefits of being a cash buyer is that you don't have an appraisal.
Yeah, you don't have any underwriting.
you don't have any-
except for your wife that approves the decision, or your husband, depending
Right.
on the arrangement.
Right, absolutely. So the other thing to consider with that when you're talking about appraisals, a lot of times what buyers are doing when they're making offers right now, when they're in multiple offer situations, they're offering more than asking price. Buyers will they'll guarantee the appraisal, or they'll offer what's called an appraisal gap, and so that a lot of times might be what this buyer is alluding to is how does the buyer guarantee to the seller that the property is going to appraise? Well, they can do that in offering an appraisal gap. So, for example, you have a $400,000 property, you offer $420 on it, and it appraises for $410,000. What happens if you don't have that appraisal gap guarantee in there? Then you have to renegotiate the deal, and so that can be a way for a buyer to have a better offer, is to offer an appraisal guarantee. Are appraisers the ones curving the market? The last question, are the appraisers the ones that are curving the market? No, I don't think so. I think it's supply and demand.
Yep.
It's the super low inventory and it's the demand for homes that are driving up the price.
And we can get into that. I know we're going to, but we've got another text question in the docket. And if you have a text question, You can text it into 763-443-5664. One more time, that's 763-443-5664. Andy asks, are we getting back to a time where agents and loan officers show up to closings, or do you think things won't go that way anymore?
That's a great question.
And Andy is a previous winner. He wanted to pass along his thanks for the great tickets.
Oh, that's awesome. So that's a great question. You know, COVID has changed so much in the real estate industry and just all industries in the last couple of years. I would say that loan officers typically don't come to the closing anyway. It's just a number of it just can't be done. If you're doing the type of volume like you and your team do, Mike, you can't go to closings because there just isn't enough time in the day. You have to process and get the loans done. Agents, I like to go to my closings if possible. I mean, even during COVID, I was going to most of those closings, even if some of those were pre-sign or, we signed, the day before, or certainly, we didn't, buyers and sellers weren't even in the same room during the pandemic. So that's changed. So I think, yes, I think agents are more likely to be at closings now that for the most part, the COVID is past us. I think it's as an agent, I think it's a great opportunity to be with my clients, to celebrate the closing of the home, to celebrate all the hard work that the buyers and the sellers and the agents and the title and the mortgage and everybody that's involved in the transaction has all the work they've done to get to the end, which is the closing. So closings are a celebration. I love going to them. So I think you'll see more of that. I definitely think you'll see more of that. So
what do you think is a bigger celebration in today's world? Getting an offer accepted or getting to the closing table?
I mean, getting the offer accepted right now.
Yeah.
If you're working with with an experienced top real estate team and an experienced top mortgage team, like Mike and his team, if you're pre-approved, you're all but guaranteed to get to the closing.
Right.
Unless you do something you shouldn't be doing.
Which I have a story on that here.
Uh-oh.
I'm sure you do.
Somebody broke the rules again.
Well, we still got the closing on time.
Yeah.
I'll tell you the story here. Keep going, though.
So I think that getting offers, accepted right now, because inventory is so low, there's so many multiple offers, it's challenging for buyers. And we actually, Walgrave Real Estate Group has a 19-step strategy to win multiple offers, and we'll talk about some of those later in the show. But right now, getting that offer accepted is more exciting because, if it's accepted, we're going to close.
Right.
So the closing is more of a certainty than getting the offer accepted right now.
Very true. So this is what happened to me this week. So closing on Thursday, right? Buyers closing on Thursday, 2 p.m. in the afternoon. Loan was clear to close 10 days before closing, right? Mm-hmm. So one of the things with loans, though, is that we have to do a re-verification of employment. So just a verbal verification of employment within 3 days of closing, just to call up the employer, say, hey, so-and-so still work here? Yep. Okay, great. We're good to go, right? So loan is clear to close a week and a half before closing. Buyer thought, well, it's clear to close. I don't have to tell him that I'm starting a new job on Monday. So Monday of this week started a new job with a closing on Thursday. And so what happened is that Thursday morning, processor calls the employer and says, hey, just got to make sure that he's still working there. Nope, last day was last Friday. And closing's supposed to be happening in 5 hours, right? This is like 9 o'clock in the morning. We're supposed to close.
In 5 hours?
We're supposed to close in 5 hours.
Oh, my goodness.
And then we're just like, so then it's just like, alarms, sirens, fire hat goes on, and it's like...
most people don't know this, but in this situation, it's one of those rare circumstances in which your loan officer is allowed to physically strike you. By statute.
It's in small print.
It's allowed.
Yeah.
By statute.
Slap you for, what are you doing? What are you doing?
So in the buyer's head, he's thinking, well, you told me my loan was clear to close 10 days ago. I'm like, I just didn't want to open a can of worms that we didn't have to open, right?
Right.
Because that job ended on Friday. He started his new job on Monday.
Right.
Making more money, like the whole thing, right? So it's a good move. It's just he didn't tell me. So we found out that way. And I'm like, hey, so we don't work there anymore. And then he told me the story.
Yeah.
And so then we just had to get the information from the new employer. So we had to hop back in. We had to get, employer name and address, and get an employment letter to show what he's making, stuff like
Yeah.
that. Still got to closing on time.
Yeah.
Right.
Tell you what.
But it was definitely a fire
Stressful,
drill.
yeah.
But
That is definitely a reason to be working with a reputable local lender. That closing would not have happened same day if you were working with someone who's not really in the picture.
yeah.
So
Yeah, or
working
or
with Mike and his
different
team at
time zone
Luminate.
or-
Yeah,
you know,
exactly.
all that stuff.
Yeah.
Yeah.
Oh, couldn't confirm it. We got to push closing 45
Yeah.
days. Deal's over.
45 days. There's very few companies that turn that and still get that closed, to be honest with you.
Yeah.
Yeah.
So, but anyway, so that's what, when you brought up closings
Yeah.
all but guaranteed unless
Yeah.
something goofy happens, I'm like, well, something goofy just happened, but we still got to closing on
Law
time.
of
so.
large numbers. You work with enough clients, there are going to be some that just, I didn't think to mention that.
I didn't know. Folks, we
We
got
appreciate
the phone, we do. We got the phone lines open, folks. If you'd like to go to Timberwolves game on us, give us a call. 2 pair of T-Wolves tickets giveaway this morning. Excuse me. Phone lines are open to the studio. Give us a call at 651-647-2910 with your real estate question to win Timberwolves tickets. Phone lines are open at 651-647-2910. You can also text your questions. Would you like to win via text? Text your real estate questions, anything and everything real estate related, to win Timberwolves tickets. We're giving away 2 pair this morning for the 2 best real estate questions. The text line is 763-443-5664. Text us your real estate questions to 763-443-5664. All right, Overson, you brought in all the material.
Just
The cost of waiting, folks. Interest rates have gone up. They are still very, very good interest rates. Anything below 5% is a fantastic mortgage fixed rate. Folks, when I got in the business in 99, the fixed rate was 8.25 on a 30-year fixed. I do not recall anybody complaining about that being too high. That just was what it was. Since then, we've gone down and down and down and down. The pandemic has driven it unnaturally low, and so now we're in the 4s, and this is a good place to be. But what does it mean? What does it mean if you buy today at 4% at today's price, or you wait a year? And what it will likely be as far as price, and what it will likely be as far as an interest rate. What does that mean?
what does that mean? So I actually pulled that up. Evan, are you able to pull up that Word doc that I sent over?
Which one do you want?
Just the Word doc.
Just the Word doc? Give me
Yep.
1 second here.
So what I did is I took a $400,000 house now, and I did a 5% down payment on all these scenarios. Okay, so this is with just a 5% down on a standard conventional loan. So $400,000 house now, and then at a 4.25 interest rate. And so
I'm
what-
getting there.
Okay, so once it comes up here, you're going to see the math. So $400,000 at 4.25, you got principal and interest at $1,869. Insurance, I'm estimating at $165 a month. Taxes at $350 a month. PMI is $88. We got a total monthly payment of $2,472.
Kind of
Okay.
came up small.
So
Hang
that's what it looks like. So basically, that's what it looks like today. Okay, so under the now column. So if you go 1 year from now, we used 6% appreciation, which is probably still going to be low for the next 12 months. Do you guys? So I just heard the stat actually last week. Appreciation year over year, last year to now. Do you know how much it went up?
do you want us to cheat or
10.6.
Is that what it was? 10.6. The number I heard was 15, but 10.6 is still, so
Yeah.
we're using 6% on this,
Yep.
right? If you look over the last 3 years, it's been 10% or greater each year.
Yeah.
So we're still conservative on this side. So a year from now, even on a conservative calculation, you're going to be paying $424 for that house versus paying $400 today.
the 10.6 is our local market? Was the 15% on a national basis?
I think it was
or-
probably a national basis.
Yeah, and yeah, boy, it's something.
So now you do a $424,000 house, and let's say interest rates stay the same, right? So let's say they stay the same at 4.25. Now you're at $1,981 because you got a higher loan balance because the price of the house went up. So $1,981 for principal and interest. Insurance we're going to keep the same at $165. Taxes we keep the same. PMI is up a little bit because your loan amount's a little higher. So now you're at $2,594.
I would probably say that insurance on this second one would actually probably be more like 180 because the cost to rebuild is going to go up that roughly same amount as inflation.
Yep.
That's a good point.
But if you buy today and you have that house and you do your yearly thing with your insurance agent,
Yep.
you're probably year over year adjusting that anyways in all scenarios.
True. That's true.
So anyway, so you're at 25.94 there. But what happens if rates go up another point and they go to 5.25? So now you wait next year, you got 4.24 you're paying for the house, you're going to be at a 5.25 interest rate. Now your principal and interest is the 22.24. Insurance, we're going to keep the same. Taxes will keep the same. PMI will keep the same there. So now you're at 28.37.
That's brutal.
Right?
So that's about $365 per month more. About $365 per month more. What is that over the 30-year term? $131,000. So that is the potential cost of waiting on a $400,000 house is $131,000 over the 30-year term of that mortgage. So it's a big number, and it's important to understand what it means, because a lot of times we have buyers that we talk to in the given year, and they're not really so much concerned about the interest rate, but they want to save some more down payment. I want to save another $10,000. I want to take this year to save an extra $10,000 so I got more down payment. Well, saving an extra $10,000 to put down is going to cost you $131,000 in this example.
Right.
Yeah.
So that is that's not a great strategy, and we talk to buyers all the time about that.
So that's the cost of waiting there. So I also did then I did a buy versus rent on a $400,000.
Okay.
So we'll have Evan pull that one up next here.
Already there.
Okay, so this is a $400,000 house that you're going to buy versus a $400,000 house that you're going to rent. So on the top left, you can see on buying year one, you got principal and interest, you got your taxes, insurance, PMI, all that stuff there. Total monthly expenses is $2,535. Rent, now this is just what the system pulled it. This would be average rent for a $400,000 house in Hennepin County.
Okay.
So you can see $2,556. You got renter's insurance at $38 a month, so $2,594. Okay. So the cash flow difference, and I did this over 10 years. Okay. So the cash flow difference is $31,457. What does that mean? That means that over 10 years, your straight out-of-pocket dollars that you're going to pay is going to be $31,457 more to rent than to buy. Okay, because your rent is going to increase at a 2% annual increase, as you see there, and so the straight out-of-pocket is going to be $31,400 more if you rent. Now, when you rent, what do you get at the end of the day? Nothing.
Nope.
You got to live there.
Well, you get to pay your landlord's mortgage off.
Right, but you got
That's pretty sweet.
Yep.
But you got no equity.
For her.
Right? You got no equity, no tax benefits, anything like that, right? So over those 10 years, the appreciation gain, and I just used a 4% appreciation on this. Okay, so you can see that down there, $400,000 at 4% a year. That's the average over the last 40 years, so that's why we went with that. So you're going to have $192,000 worth of appreciation in that house. So you got $192,000 of free money that you got by just owning that house. Okay? The amortization gain, which is basically how much principal balance you've paid off $78,116. Okay? So if you go down at the end, the net gain of buying the home after 10 years, you're $260,000 richer by owning a house versus renting, and that takes all factors into consideration.
Yeah, and you're using a 4% appreciation,
right?
Which I think is
low.
Is conservative. I mean, that's very low. It's $250,000, folks. It's more than $250,000 net gain by buying a home rather than renting a home. And you got, even though the inventory of homes for sale is very, very low, there's still more homes for sale than there are for rent.
Yeah.
So you have far less options renting. And I would also challenge that, a house that is going to cost you $2,500 to own is going to cost you quite a bit more than that to rent.
Yeah,
in most cases, this is Hennepin County, Hennepin County stats. But if you look at other metro areas, we're seeing rental costs of rents quite a bit higher on the same property.
So if you go to the top here, if you see the rent at year 10,
yep.
So buying year one, well, the nice thing about a 30-year fixed mortgage is that your principal and interest payment stays the same. The only thing that's going to change are taxes and insurance.
Yep.
Right? Your rent's going to change. So on year 10, instead of paying $2,556 for rent, Year 10, you're paying $3,055.
So here's my thing that I'm going to add on to this too, is if you're renting a single family home, the chances of you actually being in it for 10 years in this kind of market are pretty low.
Yeah.
Because what's going to happen is 3 or 4 years from now, someone's going to buy that house from the person who has had you paying their mortgage.
Sure.
And then they're going to say, well, I really want to live here. So at the end of this year's lease, I'm moving in and you're moving out. And so there's that where it's like, oh, well, not only do you have to deal with the fact that you're paying more per year, but you're also probably going to have to pay for a move in the middle of this, because I think the chances are very low that you're going to rent a comparable home for that whole 10-year stretch without getting the boot.
Yeah, I think that's absolutely true. I mean, there's far more stability in owning a home than renting.
Yeah, the only way you're getting kicked out of your house if you own it is if there's a natural disaster,
Right.
or if you don't pay your mortgage.
You should quit paying the mortgage.
Right.
But on rentals, you'll see most leases are a year. Then they just automatically go to month to month. Some are 2 years. But you know that rarely do you see a residential lease more than 2 years, and then it just automatically goes into month to month after that. So, great example. It's over $250,000.
So the next one I did was a $600,000 home.
I clicked the wrong button. Hang on.
You know, someone's like, "Oh, you're going to really rent a $600,000 house?" Yeah.
Yeah.
There's a
Happens all
lot
the
there,
time.
and it's becoming more and more prevalent because home prices are just they're sliding up, they're going up. So that's definitely becoming more and more popular, where you're renting higher end homes. So there's more higher end like that for rent.
Yep.
And so same situation here. Buying year one, you can see your $2,656 for principal and interest. Your taxes is $895. That's taxes, insurance, PMI. That's the whole thing. So you got a total monthly payment of $3,551. Your first year rent payment in Hennepin County for that house is $3,861. But on year 10, now your rent is $4,614 on year 10 for that thing. So cash flow difference straight out of pocket when making your mortgage payments versus paying rent, $73,500 over 10 years. You can see that their home appreciated $288,000, and the amortization gain, which is your principal that you got, the buy down that you got there, is $111. So that's a total of $420,444 after 10 years. So you're $420,000 richer or more wealthy by owning a $600,000 house versus renting that house over a 10-year period.
I'm trying to see if I have any
That's a big
Snoop
number,
Dogg music.
folks.
$420,000.
That is a big number. That would be a good Snoop Dogg song.
That's a lot of green right there. Look at that. $420,000. That's a whole nother house. That's that whole first house that we were talking about.
It's the whole first house.
So the other cool thing that this thing does, if you go to the bottom, you know, it goes year by year, right? So if you bought that $600,000 house and you had to sell it after year one, you were actually losing $5,400.
Yep.
Because this system takes in the cost to sell and things like that, right? And so people are like, well, 10 years, I probably won't be there 10 years. So I mean, it's really not that much, right? Well, you can look at it. After year two, you're $33,000 ahead.
Yeah, look at year 4, 116.
It only takes 4 years, and you're $116,000 ahead of the game, and that's all factors coming into play.
I think that's a key thing. There's a lot of people that think, well, you know, I'm moving to the Twin Cities for this job. It's a contract position. I'm only going to be there 2 or 3 years. Yeah. We might as well just rent because the housing market's crazy right now. I've literally had this conversation with someone. It's like, no. You should buy a house. Even if you don't intend to be a landlord, you don't want to have a property rental company manager after you leave, you think you don't want to be tied up in that, that's fine. If you're going to be here for more than a year, it makes sense to buy. It absolutely makes sense to buy if you can make it happen.
Yep.
Yeah, this is a great example. And folks, whatever your budget is or whatever your price range is or whatever your current rental rate is, say you're renting, we can plug these numbers in for you. So we can put in what you're currently renting, we can put in what you want to buy, run all the numbers, and you can take a look at, you know, what it means over 1 to up to, you know, to 10 years.
And we can adjust all this stuff too. If you think, well, my rent's going to be locked in for 3 years, there's going to be no gains. I know my landlord, I've got this great lease. That's great. We can adjust all those numbers, right?
Yeah, we can adjust I mean, literally everything in here is customizable. We just plug what you want to plug in and spits out this report, and you're good.
Yep. Love it. Folks, we got the phone lines open. Would you like to go to a Timberwolves game on us? Give us a call. Studio lines are open at 651-647-2479. 2910 for free Timberwolves tickets. We got 2 pair of tickets giveaway for the best real estate question. Anything, everything real estate related. Financing, credit, home improvement, insurance, new construction. Give us a call. Studio lines are open to win Timberwolves tickets on us. 651-647-2910. 651-647-2910. That is the studio line. Give us a call, or you can text us your real estate questions to win Timberwolves tickets. The text line is 763-443-5664. The text line again is 763-443-5664. Call or text, win Timberwolves tickets on us. All right, Overson, what else you got over there?
Well, I was like, so someone buying a $600,000 house in today's world, that maybe that's a longer term play, right? Maybe that's a 20-year house for them at this point, right? Because a lot of people are building a new construction house like, hey, we're building this new construction house. This is what we're going to be. We're going to be here for 20 years. Or we got kids. We know that, we got younger kids. They're going to be, out of high school, into college and all that stuff before we move or do anything like that. So I actually just put a 20-year one together. Evan, I just sent over to you.
Yeah, let's take a look at the 20-year one.
So let me pull this up here once.
Did you send it to the right email address?
I think so. I thought I did.
How many email addresses do you have, Evan? I bet you have 8.
Including my work emails?
Yeah. 8.
10.
10 and 10.
A couple of them I haven't looked at in years, but yeah.
Do you have a Hotmail account?
No.
No. Once in a while, about once or twice a year, I'll have a client that still has the Hotmail account.
I get a lot of those, actually.
Do you really?
Well,
Yeah.
I should say I get a lot of those as callers on the radio show because I'm constantly taking down emails for where we send the tickets to.
Yeah.
And
A lot of Hotmail.
yeah, a lot of Hotmail. I had one recently that was it wasn't an AOL. I can't remember. It was
AOL?
one of the older ISPs. I don't think it was AOL, but it was someone else.
Okay, so all right, so that's the one here. So let me hit send on that. So I just sent it to the Minnesota Home Talk at Gmail.
Folks, if you got real estate questions and you'd like to go to Timberwolves game, give us a call. The studio lines are open at 651-647-2910. The text line, you can win Timberwolves tickets by texting your real estate question to our text line, which is 763-443-5664. The text line again to win Timberwolves tickets. We're giving away 2 pair for the 2 best real estate questions. Text us your real estate questions to 763-443-5664. We're talking about real estate this morning, folks. Right now we're talking about the cost of waiting. The cost of waiting, comparing today's prices and interest rates, to what they are likely to be or very well could be a year from now. Certainly the prices and we are expecting interest rates to continue to climb as well. I think we've got the next.
So the next one is a $600,000 house. So a rent versus buy comparison, $600,000 house, and holding that house for 20 years. So it's a longer term play. Family's like, we're going to live there. It's a longer term play. Do we rent that house or do we buy that house? So that's what this shows here. So did you get it, Evan?
No.
Oh.
You sent it to Minnesota Home Talk?
Yeah.
Okay, well, no.
Must have went to the other Minnesota Home Talk.
Yeah, must have.
Did you pay the gas bill?
No.
So
I don't believe in paying bills. You know this.
So the cash flow difference here. So the cash flow difference over the 10-year or the 20 years now is $239,000. So over 20 years, you're going to pay $239,000 more just out of your pocket over the 20 years to rent that house versus to buy that house, right? Because when you buy a house on a 30-year fix, principal interest doesn't change, right? On year 29, your payment's the same as it was on year 1, right? Yep. That's the great thing about it. Yeah, taxes and insurance change a little bit, but your principal and interest is the same. Rent increases each year.
Yep.
Rent actually doubles every 20 years. That's the stat.
Okay.
So when you start out on year number 1 for this house, you're paying $3,800 for rent. On year 20, you're paying $5,500. Right? So the cash flow difference, again, $239,000 just out of pocket more to rent that house. Now, your appreciation gain is $714,000 over 20 years.
Yeah.
Okay. Again, that's a 4% appreciation. So that $600,000 house that you bought 20 years ago is now worth $714,000 on year 20. And your amortization gain, which is your principal buy down, is $280,000. So after 20 years, you are now ahead of the game by $1.156 million.
Wow.
By buying that house versus renting that house over a 20-year period.
Become a millionaire by simply owning rather than renting in this example over a 20-year, 1.1 million.
1.156.
Wow.
That's a big difference.
Deal. That's a big deal, folks.
And that's even after your cost to sell. So that's assuming you sell it after 20 years and you're paying your cost to sell, your real estate commissions, your closing costs, your deed transfer tax to the state of Minnesota, all that stuff.
Wow.
After your cost to sell, that's the net.
I mean, the forced savings alone is just phenomenal. You know, the amortization gain, which is principal buy down. I mean, it's just, that's one of the great benefits of owning and having a mortgage as a part of that payment every month is going towards the principal. It's forced savings.
Right.
It's pretty fantastic. Folks, we got the phone lines open. Do you have real estate questions? Would you like to go to a Timberwolves game on us? Give us a call. The studio line, phone line, is 651-647-2910. Give us a call. Studio lines are open. We would love to hear from you. 2 pair of Minnesota Timberwolves tickets. The T-Wolves are kicking some butt. A lot of fun to watch. I think they've outscored, what the stat I said, last 7 or 8 games, they've outscored any team in the NBA when the combined points.
Oh, yeah.
I mean, it's a massive amount of points. Pretty exciting. Phone lines are open. If you'd like to go to T-Wolves game on us, give us a call with your real estate questions. 651. Studio lines are open at 651-647-2910. Give us a call at 651-647-2910. The text line, you can text your questions to 763-443-5664. The text line is 763-443-5664.
Hey, Mike, we've got a question here from Keith in St. Paul, and I'm wondering if we can run one more of these at a slightly different bracket.
Sure.
He says he's renting for $1,200 a month. He makes plenty of money. He can definitely afford to buy based on what he's saying here. What financial benefit would he have buying a roughly $250,000 house if he bought this year?
So $250,000. Okay.
So $250,000, and his current rent is $1,200 per month, which tells me he's not living in a comparable home, probably, but maybe kind of on that line. I think a $250,000 house probably is more like $1,400 in rent.
Probably $1,800, $1,900.
That high now?
Yeah.
Okay.
Yep.
So do we want to do a $250,000 house versus a $1,200 monthly rent?
Yes.
Sure.
Yep.
Okay. Okay, so let's put that in. We'll do annual rent increase. We'll do 2% a year. We'll do a $250,000 house tax rate. So let's do $2,400 in taxes a year.
Riveting typing happening. And while you're working on that, let's take one of these other text questions. I got a question here from George. George is wondering, can you get a duplex or a fourplex? What's your thoughts on this? Do you guys think it's a good idea to go for a plex and try for a quick sale? I know in my experience, it seems like demand right now for duplexes is even higher than it normally is.
Yeah, it is. Duplexes, triplexes, and fourplexes. And that's been, the demand for those 3 different types of property, the demand's been really high for 20 years, mainly due to the inventory. There just aren't a lot of available duplexes and fourplexes out there. And now because the overall inventory is so low, that makes it even more challenging. But folks, we do a lot of off-market deals. We have a large group, a large network of owners, investment property owners that, they're willing to sell their properties off-market. And so if that's something you're interested in, buying a fourplex or a duplex, I think that there's a good chance we can find you something that's off market. I think these are great opportunities to buy real estate, and especially if you're going to live in one of the units, you can really reduce your monthly cost, your living expenses, because you've got a renter or maybe 2 or 3 other renters in the building to help cover that. So I think there's some great opportunity. There's also phenomenal financing available For duplexes, triplexes, and fourplexes, anything fourplex or smaller is considered residential. If it's 5 units or more, that's considered a commercial property. So there's different loans that are available for the commercial properties. But in Mike, you can use on the is it duplexes, threeplex, fourplexes? You can use rental income. If you're living in one unit and you're going to be renting out the other or others, you can use that future rental income to qualify, I think, right?
Yeah, absolutely. And so we've done that before. It's like, hey, if you buy a single family house, you qualify for, $250,000 based on that.
Yep.
Now, if you are interested in buying a duplex, because we can use the rental income from the other side, now you qualify for a $400,000 duplex.
Mm-hmm.
And it's one of those things where if it's not for you, it's not for you. That's completely fine. But it does open the eyes up of kind of like,
Mm-hmm.
So, it might be, I might be able to get a nicer unit for myself to live in at that price range in a duplex, but then I also have the renter offsetting the payment,
Yep.
And I gain more appreciation, and things like that. So it's
What's the percentage of rent that they can use? Is it 70%?
75%.
75%. So think about that, folks. If they're only using 75% of the rent to qualify, you still have an additional 25%. You're applying the whole thing towards the mortgage or the cost to live there. So it can be a great opportunity to get more home for your dollar and live in a nicer house.
Right.
So a duplex.
And a 250 single family and a $400,000 duplex, it's not like the payment is double. So it's not like, my payment's doubling but the renter's paying half, so basically out of my pocket's the same.
Yeah.
It's not that case at all.
No.
A $250,000 single family and a $400,000 duplex, let's say the payment difference is $800 a month.
Mm-hmm.
Well, your renter is probably paying what on a duplex? $1,400 probably.
$1,400
for the other unit. So if your payment went up $800 because of it, but your renter's paying $1,300 of it, now you're covering your payment on your out of your pocket just went down $500.
Yeah.
Because your renter's covering the additional chunk there. So did you
right.
get it? I labeled it Keith.
Labeled it
give
Keith.
me 1 second.
We got an example. Text in a very specific example. He's renting for $1,200 a month right now. I want to find out what that looks like if he buys $250.
I haven't gotten it yet. I'm sorry. I've got text questions coming in left and
That's
right.
Go text questions. You can just go over it too, Mike.
So
If you've got a text question, real quick, 763-443-5664.
So if we do a 250 house that you're going to buy, I got a total monthly payment of $1,506, and that's taxes, insurance, that's everything, right? He's saying he's paying $1,200 right now. So your cash flow difference out of pocket in this particular example, you're paying $20,800 more out of pocket to own that than to rent it.
Over 10 years.
Over 10 years.
Okay,
that's over 10 years. But you're going to have $120,000 of appreciation on that house over 10 years. You're going to be paying your principal balance down $48,000.
I got it. Give me 1 second here.
And so your net gain after 10 years of selling, you're still $121,000 ahead of the game.
Yeah. Not only are you $121,000 ahead of the game, but I can guarantee that the $250,000 house that you're buying is, can almost guarantee it's going to be a lot nicer than the one you're renting for $1,200.
Yeah. So that's the other thing too here. We're comparing if you're going to rent a $250,000 house, so if we're doing an apples to apples comparison, buy a $250 house versus rent a $250 house. Rent on a $250 house right now can't be less than
it's $1,800 to $2,000 a month,
right?
Yeah.
With a couple of specific areal exceptions.
Right.
I mean, obviously, if you like I was telling you before the show, my former roommate found a really, really great below market rate house, but that house is currently, it sounds like, in the process of being sold.
Yep.
And this goes back to what I was just saying like 15 minutes ago is you might not be living there that whole time. So you can see here, year 3 even, same thing with that crossover point. By the time you've been in that new house for only a few years, you're already well ahead.
Yep.
And, it just racks up more and more over time because of that fixed payment versus rent increases. And, of course, you're gaining in net value on the home.
This is an example of somebody that might want to just keep this house and rent it out. This is a great first investment property. You buy it, you live there for 3, 4, 5, 10 years, and then you keep it. You're still getting a great interest rate today,
right?
And that could be a great future rental property.
All right, so we've only got a couple minutes left here in the show. Do you want to hit one more text question?
Text question,
All
yep.
right. So we've got a text question here from Mickey. I will put it up on the screen and hide this. Mickey's full question. Hey guys, I currently own a house in the Minneapolis neighborhood. It was our starter home. We're probably looking at moving in about 3 years as I'll be starting a new job with a much higher salary. He wants to move to a lakefront area. Is there anything I should be doing or looking at now besides general maintenance of our current house?
So that's a great question. What do buyers look for when they're buying a home? On existing homes, buyers are looking for the condition of the siding, windows, roof, furnace, AC unit. It's a tough question to answer because they're not going to be selling for 3 years. What I would do if they were going to be selling now is I would pull up comparables. What do the comparable homes in the neighborhood, what have they done to achieve top dollar, if achieving top dollar was the goal of the seller? And so a lot of times sellers think we got to put in new kitchens or we got to redo the bathrooms, and that might not be the case. Maybe the comps, they have original kitchens, but they have new flooring, or they have new appliances or new countertops. And so to answer that question better, it's good to look out 3 to 6 months from when you want to sell, and then we can take a look at what the comparables have done. But what do buyers look for? They look for, the bones of the house, the bones, and that's the roof, foundation, siding, windows, etc.
We didn't even get to the wild market updates that we have for you.
No, we didn't.
Not a lot of homes out there. You'll have to tune in next week to hear all of it.
Folks, do you have a house that needs a lot of work? Are you ready to sell, but you think no one will buy it because of the condition? Would you like to sell and close your home in as little as 7 days? Give us a call. We have clients that are buying properties for cash as is right now, and they are looking at all properties in the Twin Cities metro area. Give us a call or check us out online at minnesotahometalk.com. Folks, that's minnesotahometalk.com. Thanks for tuning in. Have a great week.
This has been a paid program. The views expressed are not necessarily those of the management or ownership of SKOR North, KSTP AM 1500.
SKOR North on AM 1500 KSTP St. Paul, Minneapolis, 94.5 KSTP FM St. Paul HD2, and on SKORNorth.com.
Hi, this is Troy Danner of Danner's Cabinet Shop. My family has been building custom cabinets and countertops for homes in Minnesota for over 50 years. We still make the cabinets the way my grandpa did when he founded our company. My team of skilled craftsmen pride themselves on attention to detail and making sure every element of your project goes perfectly. Give me a call at